Then you will go to tradesystem.gov.ng to process the NXP. So you will log in the detail, fill the NXP and submit. NXP is Nigeria Export Proceed Form. So let's look at the Nigerian export process. The one we did before was general. Let's look at Nigerian export process now. How, if someone wants to export to Nigeria, how does it happen step by step? Number one, exporter do preparation and planning. Remember export readiness, right? Yes. Preparation and planning. Then contract sourcing and signing. I've told you what is in the contract, right? We discussed that later before now. Contract and signing. Then export funding. Now, if you need pre-export, that's why you need this contract signed for the bank to fund the pre-export. From friends, from family, from bank, wherever it's getting it from. Procurement or manufacturing, depending on the source. Then you will go to tradesystem.gov.ng to process the NXP. So you will log in the detail, fill the NXP and submit. NXP is Nigeria Export Proceed Form. NXP, Nigeria Export Proceed. So if you're exporting from Nigeria, you need to apply to the government you want to export and you use NXP. Then exporter fill the NXP form and attach pre-export documentation. What are the pre-export documentation? These are the pre-export documentation. You fill the NXP, you attach a pro forma invoice, you attach a certificate of export certificate from Nigerian Exportation Council, then CAC. For you to be able to export, you need to register as a limited liability company. Business name can. Enterprise can. Subscription enterprise can, but cooperative can. Cooperative can. Limited liability can. Cooperative can, and of course PLC also can. Certificate of, and in the memorandum and article of association, export must be clearly stated. Either the word export, exporting, exporter, exportation, that word export must be on the memo for them to be eligible to get the certificate required for export. It's called the export license or export certificate from the Nigerian Export Promotion Council. You say what? Yes, from any business. Then you pay the next fee. The next fee is Nigeria Export Supervision Scheme. Nigeria Export Supervision Scheme. Next, yes. Nigerian. When you are selling from Nigeria, you don't pay export duty. And I'm sure I've not looked at the new tax act. I'm sure it's still the same. I've not looked at it, but I'm very sure it's likely going to be the same because that's an incentive for export. You don't pay tax. You don't pay income tax. You don't pay tax on your profit. You don't pay VAT on your inflow. You don't pay export duty. You only pay a fee when you are exporting, and it's called Nigeria Export Supervision Scheme. And it's 0.5% of the FOB value. Remember FOB value, right? FOB value is the value of the goods plus profit. FOB value, that's free on board, is the value of the goods plus profit. The value of the goods plus profit is FOB. And you pay 0.5% of that. 0.5%. Then, if you are exporting under AFCFTA, you will need certificate of origin. AFCFTA is African Continental Free Trade Area. That's an agreement within Africa to trade together. If you are doing that, you will need certificate of origin. Then you fill your RFI. RFI is request for information form from the inspection agent. Government have an inspection agent. That inspection agent, you need to fill a form, which an email will send to the customer automatically to fill the form and submit. And request for information. So this, for anything living in Nigeria, there is a designated pre-shipment inspection agent of the federal government, appointed by CBN to do the inspection. To do that inspection, you need to inform them about the detail, the product, the location, the date of the inspection, and the like. And you need to provide that via the RFI. Yes, go ahead. Okay, so I was looking at pre-export documentation. Then you fill the form, submit it, complete the NXP form, transmit it to the bank. Now, bank approve the NXP and transmit to PIA. Bank approve the NXP, Nigerian Export Proceed Form, and transmit to pre-shipment inspection again, PIA. The one covering south-south and southwest is called the rolling technology. Then, external warehouse, the goods and book container for loading. External warehouse and book container for loading. Inspection is done at the port. So there are inspections done here. Now, please note, this is one of the very important aspects of this transaction. Here we have inspection done by customs, statutory inspection. We have inspection done by the railway technology, statutory inspection. Here we have inspection done by the buyer's representative or buyer designated inspection. Buyer's designated inspection. So this inspection must be done to ensure that the bank is financing good quality product. Else the bank might be financing bad quality product. Bad quality product. Now, PIA notify next fee value and pay the next fee. Extra pay the next fee. Bank transmit next receipt to PIA and PIA issue CCI. CCI is clean certificate of inspection, not certificate of capital importation. Clean certificate of inspection. PIA transmit the certificate of inspection to customs and custom issue single good declaration. A single good declaration form. Custom clear the good for export and transmit the SD to the shipping line. The shipping line load the good on board the vessel and issue the bill of lading. The exporter prepare the other document, post-export document, and deliver it to the bank. The exporter's bank. Exporter's bank deliver the document to the importer's bank. Importer's bank effect payment by the importer. The payment is vetted by the importer's bank, and the account of the exporter is credited. And the account is credited in the export dom account. Export dom account. Export dom account is open with zero balance. And you cannot deposit into it, you cannot withdraw from it. You only deposit, it only receives inflow from abroad. And it's only debited to be sold in the FX market.
Sorry, excuse.
Yes.
The role of this, the mode of payment is not discussed.
It's no. The mode of payment. Now look at this. Look at this. From this point, if it's open account, this document will go straight to the exporter. If it's bill for collection on letter of credit, the document will go from the exporter's bank to the importer's bank. So this model is designed for bill for collection and letter of credit.
Exactly. I was looking like that.
Okay. Bill for collection. Letter of credit.